So today I hope everything is well and your week was going well. Today our session will be about the secret of trading. So what are the secret or what is the secret of trading? We will be starting with who trades and why. So we have central banks. As we know, central banks want to make their money and their economy more competitive by devaluing their currency. This makes the currency cheaper and exports will be more attractive. So central banks focus on how to make their economy stronger. And by being stronger, this means they are competitive. And in this way, they will have a value for their own currency. So banks, as could be a market maker, so they are making a market in the FX market, or they may be trying to hedge their portfolio. So banks, in a certain extent, use ways that uh, they hedge clients in a way that whatever the circulation of banks is a bit more into economics. So corporations need to buy raw materials, so they would need to be involved in foreign exchange. For example, I pretend myself I'm Toyota and I need to buy raw materials for the tires. And let's say that the tires will be coming from India. What I'll do is I will need to sell some Japanese yen since Toyota is in Japan. They manufacture in Japan, and I want to buy rupees. I'll take these Indian rupees and go to the companies in India to exchange for the raw materials for tires. So this is how it goes when we're talking about foreign exchange and how do corporations work. Now, for retail traders, they could be trading the market to speculate or to generate better returns compared to putting their money in the bank. So it's all about trading between retailers. As we can see here, this is how the network of the stock market looks like. We can see here in the center are the central bank, and then we have the major banks. Then you have the investment funds. There are many types of investment funds. And then we have the commercial company trading with the banks. And finally, retail traders like you and me who trades in the market as well. So after moving with central bank, as we said, we have the major bank. This is how we're saying the circulation of the money. So it's between central banks with major banks with investment funds, commercial company, large speculators, and then it is us who we are the traders, we are the investors, we are the retail traders. So what are the advantages of trading? There are numerous advantages of trading. We have high liquidity, we have low barrier to entry, we have better risk management, low transaction cost, and trading anytime you want. So high liquidity for the market, it typically has high liquidity. This means that you can get in and out of your trades relatively easy without paying a huge premium or spread. As we said before in the previous presentations, that what a brokerage company charges is spreads. So whenever you open a position, there's something called spread, which is the difference between the ask and the bid price. This is how we narrow down the meaning of high liquidity and how we can get in and out fast. So we have low barrier to entry. This means that anyone can open a trading account. You do not need to be a high net worth individual. So you can start with any amount, $100, $1,000, $2,000. You have no limit. Better risk management. Certain brokers allow you to trade in nano lots. This in return allows you to better manage your risk. What do we mean when we say better risk management? I'm going to give an example here. One of the biggest problems of most stock traders face is, for example, you have a small capital of $500, and if you want to apply proper risk management on stocks, it can be difficult since you have a small amount that you can manage even. Because let's say you want to risk 1% of your account. How much is 1% of $500? It's $5. If you pay your transaction costs, it's going to be more than $5 for stocks. Depending on the broker, one round trip charge could be $10. So it's difficult to apply proper risk management on stocks, especially with small accounts. But for our market, it's possible because you can trade nano lots. This allows you to risk $5 on a trade. Most brokers allow you to only pay for spread and no commission. This is what we do. We charge spreads, but we have no commission, commission zero. This allows a better trading journey. So trade anytime you want. The market is open for 24/5. So Monday, Tuesday, Wednesday, Thursday, Friday, Saturday and Sunday is off for you. The market is open while you're sleeping and when you are awake. Keeping in mind, this doesn't mean that you have to stay awake all the time. Then we have to move to a different type of analysis. So basically, as a trader, even though you're a beginner trader, any stage in trading, each one of us should know the basics of the analysis. Once you open the chart, you should know that there's something called analysis of the chart. What are the types of analysis, and what are the benefits of knowing these analysis? So we have the fundamental analysis, we have the technical analysis, and we have the sentiment analysis. So fundamental analysis, it deals with news mostly. So gross domestic product, as we know, GDP, the interest rate decisions, NFP, non-farm payroll. This news comes out each beginning of each month. And these are all important things to do with fundamental analysis. We have the technical analysis. You're using tools like support and resistance, candlesticks patterns, and typically you deal with concepts that deal with charting that voids or falls down under technical analysis. So exactly here we're talking about when we are opening any chart, the technical analysis is done by reading the candlesticks. Candlesticks can be where the candle opened, where it closed, based on how many hours this candle kept going up or going down. So it's either a candle up or down. This will allow us to read this chart. Sentiment analysis. As for sentiment analysis, you are typically trying to measure the sentiment of the market. Now, we have many trading strategies. There are many trading strategies out there, but generally it can be broken down into these three: position trading, swing trading, and day trading. And here is what they mean. So position trading, as we can see here, the figure below, if you are position trading, you want to capture a trend in the market. What you are interested as a position trader is to capture the meat of the trend. What do we mean by the meat of the trend? It means exactly that I need to get the best out of this position. So, for example, I need to catch out, like we can see here, the entry. I need to catch it here. This is the meat, and I need to close it. This is also how the trend is moving. Exactly, it's the trend, what we are talking about. So you can get on the lows and the highs, but you just focus on capturing the meat of the trend. So you're catching it well, That is what a position would try to do. You are typically trading the 4 hour time frame and above. So when you're using this strategy, you're using the chart H4, which is 4 hour time frame, and this is suited for those with full-time jobs. We have the swing trading. As a swing trader, you are not interested in capturing an entire move, but one swing in the market. Let's say that the market is in a trend. What a swing trader would do is buy near the lows of the pullback, and as the market heads higher, just capture one swing. I'm gonna just get into more this and the graph after this. You are trading in the 1 hour and 4 hour time frame. So here you can use H1 or H4. This is for those who are with full-time job but want a little bit more action. Your goal as a swing trader is to capture one swing in the market. So the difference basically between position trading and swing trading is that position trading is basically used for full-time job people and looking at charts that are move 4 hours. So I'm looking maybe on things that are um longer. So it's different than this one. This one we are looking at an hour or 4 hour time frame. And our most important belief is that I need to make more action. So a swing in the market looks like this, as we can see from here. For example, I can take a buy, reaches here, and then what exactly the word of swing without me telling everything, we can know swing, what does swing stand for. So it's just like going up, down, up, down. This is how it swings. It swings this way. And then we're just like gonna brief out and conclude with the 3 worst time to trade Forex. And I'm gonna give a great example with what happened with us yesterday as traders. So it's immediately before or after high impact news. So basically, as traders, what makes us money is high volatility market. So we wait for news to make money. You can't profit from a market that never moves, and nothing can move the market except high volatility news. So we need something that that's gonna make the market just go up or down in a crazy way. So we've all been in one of those positions that takes off almost immediately in our favor and doesn't want to stop. And after 2 days of traveling 300 pips, we're left with a boatload of cash. So yesterday, for example, we had a very important news that will impact on the market. Okay, will have a very high impact. We know this well. So as a trader, I think that this news, back in mind, I'm thinking that this news will make for me a lot of money. So what I do is I open my position based on news, what I can hear, what's happening, what the Federal Reserve is talking about, what Janet Yellen might give a glimpse of, what President Biden might talk about. At the end, the Federal Reserve is a closed meeting. No one could know. It has no relation. So this is exactly one of the most important and worst times to trade because it's hard to predict the market, but at the end, if you do it right, you're the winner. So this is one. Two, the first and last day of the week. So we can see the chalkboard showing days of the week. The first 24 hours of each new trading week is usually relatively slow. Market participants are just getting back online after their 48 hours. So Saturday, Sunday, this is their break. Coming back on Monday, these 24 hours will be slow. The market won't move the same as the upcoming days in the week. It's also when the markets are figuring out which direction they should head for the coming week. So Monday, basically, the market decides how it's gonna be moving. It's all about demand and supply. So with this in mind, I tend to say that sideline each one day, unless I already have an established position from previous weeks, of course. And on the other hand of the spectrum, we have Fridays. So the final 24 hours of the trading week is often marked by lower liquidity. As you may well know, technical analysis work better in high liquid markets. Moreover, I don't like taking on new risk before the weekend. Stock market can sometimes gap quite aggressively at the week's open, and I don't want to get caught on the wrong side of a Monday gap. So basically, if I open a position on Friday, I clearly know that Saturday and Sunday the market will be closed. So maybe Saturday or Sunday, um, something important happens. America takes a decision. Biden creates a new law that might affect the market. We can see a new war. I hope not. We can see any updates between Ukraine and Russia. These all creates gap on the upcoming week. So a lot of risk here also. Third one is when you are not in the right mental state. So as trader, when you feel you are not in the right mental state, just stay away of the market. Emotions are the highlight of what it's the highlight of trading. So emotions is the most triggering thing that you can experience while trading. So to keep our emotions aside, we have to have a right mental state. Just relax. You're going into something. So mind feeling stressed and tired, trading is a game of mental discipline. So it's all about mental. Whatever your head is saying, whatever you are going through, it shows, it reflects your discipline. Those who can keep their emotions under control come out ahead. So if you can control your emotions, don't think of anything, just you can manage it alone. But if you can't control your emotions, just stay away of the market. We know what happens to those who can't, basically. But no matter how disciplined and controlled you become, there will be always those days. I'm sure you know the ones I'm referring to here. So maybe you aren't feeling well or didn't get a good night's sleep. It could also be that you're busy with other tasks, which means your thoughts are elsewhere for the day. So here we are talking about how we should control our feelings, our mental state, how to be relaxed in order to enter the market. And saying that, as we mentioned before, let's do a quick recap because some of you just joined a bit late. Let me go back to some. Okay, here we were just talking about who trades and why. So as we said, we have central banks. Basically, this presentation, what we did today is, and it will give us a brief introduction for our upcoming webinar, in which we will talk into details about the different types of brokers. As we know, we have the STP and we have the market makers. So there's a huge difference. I think we're not all aware of it. If we are aware, we don't know exactly what are the details. Our next webinar will be very interesting, and we will be talking about things that everyone want to know about. So basically, here we were talking circulation of money between central banks, small banks, corporations, and retail traders. And here we just gave this graph. As we can see, central banks, money flows to major banks by investment funds, commercial company, large speculator, and we have the retail traders, which is you and me. And here we were saying the advantages of trading, the high liquidity, low barrier to entry, better risk management, how to manage risks always, and how we can trade anytime you want. So here we were talking about the analysis, how we have different type of analysis, and how we have different methods of analysis as fundamental analysis, technical analysis, and sentiment analysis. We provide on daily basis technical analysis. You can just, at the end, I'll be sharing the barcode. You can just scan it. You can join our Telegram channel. You will be receiving daily news, daily technical analysis. This will give you an overview of the market. This will give you what the pattern of the chart is going to. Here, as we said, the fundamental goes into news. As we know, GTP news are very important. Federal rate for this, interest rate like yesterday, NFP, as we said, first week of each week of the month. And we have the technical analysis, which is the candlestick patterns. So how the candlesticks are moving. It depends on if it's going up or down, hour per hour, 2 hours, 3 hours, 4 hours. This all goes, and you can even know them more while we are sending daily updates. You can see what I mean exactly when we're talking about candlesticks. And we have, as we said, the different types of strategies: position trading, swing trading, and day trading. Position trading, as we said, it's used for people who are full-time job and they trade on a 4 hours chart. Swing trading is for also people who are full-time job, but they work on an hour chart or 4 hours chart. And day trading is mostly people who trade on daily basis or whatever. So position trading, as we can see, is we capture the entry and the exit. So we take this need to make money and to take advantage of this. As we said, we can get the lows and the highs. 4 hours chart. Swing trading, it's 1 hour and 4 hours chart. So we capture the swing in the market, as we can see here, up and down. Wrapping up with the 3 worst times to trade Forex. It's about before and after high impact news. As we gave the example of yesterday, the interest rate decision. Before, like 5, 10 minutes, 20 minutes, I just hear people spreading out that the interest rate decision, the Federal Reserve took a decision that they will increase the interest rate by 25 points, and let's whatever buy, sell gold, whatever. These are the most hard times. So it's either you take your own decision by your own analysis, by your own updates, by your own news source. And this goes back to the point that whenever you do this, you might be a big winner. So it's part of the trading. As we said also here, when it's the weakest days of trading, it's the first and the last day. At some point, the last day is somehow interesting, but it goes back to you as a trader if you want to keep some trades open until Monday. Monday usually is very smooth. The market just take back its place, either by just moving up and down smoothly until Tuesday. We start seeing some news updates. We start seeing market opening. We see the pattern, how it's going. So it takes this 24 hours. And wrapping up with the last point is when you aren't in the right mental state. So whenever you have stress, you're not in your right mental state, you're not willing to spare any time, any patience, anything, just stay out of this. It's not the right time to trade. Let me be out of trading. Whenever I feel good, I'll be back. I'll put my effort. I'll just invest the right time, the right way, and the right decision I'll be taking. So as I said, I'm waiting for you on our next webinar, which will be discussing news impact and how exactly we can take advantage of the upcoming news, how to take advantage of the incidents that's happening, what's happening around us, each news, what is the impact of each news on each market. I'll be sending more details, waiting for you next week. And this was an introduction for the upcoming, so it can be clearer. Thank you so much. If you have any questions, please just send them to me on the chat box. So basically, here's the barcode. You can just scan it. You can check our social media platform. You can join our Telegram channel, see our updated news. You can see our daily videos that we do to keep you updated with everything. You can check our website. You can check our posts. And of course, I am more than welcome to anyone who needs a one-by-one meeting to ask any question, want me to clarify anything, want me to guide you with anything, want me to help you, assist you, I'm ready. Just drop me an email. I'll be sending you a follow-up email after this that will have the PowerPoint as I do each time. I'll be sharing also my email. If you need anything, you can just drop me an email, a one-by-one meeting. Whatever you want, I'm there for you. See you next week, guys. Thank you so much.